But you know that we're going to talk about cars and how your BMW is now a classic, right? This is the starting conversation for this podcast. But
There
seriously,
you
how BMW Z4, which is 20 years old, is now a classic car?
Yeah, I know. It's pretty crazy. I mean, I've always liked it personally because even when it was new, I feel like it looked like a classic. So for me, at least, I'm just in love with the design and the drivability as well. But yeah, it's crazy to see how much time flies and how great a car you can still get from the early 2000s.
So just to refer, is that a roadster? So just two-seater, open up the small one, right? That has
Exactly.
fantastic.
Yep. Yep.
Now,
Two-seater convertible. Yeah.
oh yeah, no, I can see why one of your hobbies is just get into the car in the weekends and drive the San
Yeah.
Francisco and NorCal area.
Absolutely.
Oh
Yeah.
wow, no, that's not bad. You from there, Napa, and then you go out to less
Yeah.
touristic areas. What
Exactly.
you
Yeah. Out to the ocean usually. So you can drive Highway 1 that goes, right after you go north over the Golden Gate Bridge, you can kind of cut out towards the coast. And so all those mountain roads out there off the one and on the one itself are terrific to go to. As long as usually it's not a weekend. If it's a nice sunny day on the weekend, it's a little too much traffic, too busy. But I'll go out for an early morning drive or sometimes around sunset. People aren't really on the road.
so, but you live in San Francisco, right? So is it an entrepreneur, tech entrepreneur lives in San
Mm.
Francisco? Aren't you supposed to do that on like one of those carbon fiber race bicycles instead of a
Bicycle,
cool
yeah.
car?
I've never really gotten into biking, admittedly. I used to bike to school, and I do live up on top of a pretty tall mountain. So I actually live in the suburb of San Francisco, just north of the city. So maybe I never really got into as much walking and biking because I lived up on a hill. So it would have always been a pain to come all the way up to the
You know,
house.
let's leave the biking to the Palo Alto crowd and
Yeah.
stick to cars. The fact that you have parking space and all that stuff, that's already
Yeah,
impressive
exactly.
in my opinion. But let's try to switch it to insurance. So classic car, BMW, is it defined as classic by the insurance companies as well, or only by BMW?
That's a good question. I think right now it's only BMW, but I think it depends which insurer you have. I think some go say 20 years, some say 25 years. Uh, and it maybe depends on the model, whether they actually make you change your policy.
And how does it affect them once they decide it's classic? Do you have any insight for that?
Yeah, I think one of the biggest things is really going to come down to one, whatever the value is. So valuations, of course, for vehicles depreciate as they get older, but then the moment it becomes a classic, there becomes quite a switch up. So I think probably their models kind of have to change, or sometimes there might be an appraiser involved because you can sort of get into, well, what amount of the value of the car is attributed to it being maybe a collector's item, right? And how well it's preserved. So the whole kind of equation, I think, changes once a car becomes classic, around the ownership. And there's also the risk aspect as well. It can be really hard to find parts, for example, as a car gets that old. And so probably a lot more expensive to repair them too.
Well, I'm just setting it up to talk about claims, but that's not your business, right? So Jared, how about you make a quick introduction? Tell us what AKKO is about, and then we can talk about products, about user experience, and so many other good stuff,
Yeah.
which sometimes are also for claims. But yeah, let's start with
Absolutely.
an introduction.
Yeah, absolutely. So I'm Jared. I'm one of the co-founders and co-CEO at AKKO. We are a cell phone and device insurance and warranty technology platform. And so we create a platform that allows really any brand or type of distribution partner to launch and manage their own device insurance or warranty program. And in addition to providing, platform as a service solutions within the United States, we operate more as a sort of full stack carrier in that regard, reinsured by Zurich, North America, and what we basically are able to do is work with, cell carriers, retailers, other fintechs, insurance companies to enable them to provide cell phone and device insurance programs. And we really pride ourselves on a terrific customer experience and making it the best experience in device insurance with the work that we put into what we're building, and also providing more access as well. So a lot of that comes for access for different types of distribution partners that are maybe smaller volume, or they're in more bespoke industries, or have certain solutions that require a lot of customization and flexibility. And it's that customization and flexibility that our technology first approach to this space really enables. And that in turn, of course, benefits consumers who can now purchase device insurance and warranties on their beloved products, or the products that they rely on and use every single day for work and school and entertainment, their personal life, enabling them to get protection on those items, even if they maybe did not acquire those items through some of the traditional, more kind of legacy channels, like walking into a big box store, or even buying from online from a very large, established e-commerce brand or marketplace. So we're enabling, the whole sort of wide range and sort of, tail end and fragmented space of other types of distribution channels as well.
So is that kind of, how can I say that, a second chance for embedded insurance? So if you miss the opportunity to embed yourself in that box shop, or they're online, and people are, not people, the insurance companies still go like, I should embed myself somewhere, somehow, and have this online distribution channel.
Absolutely. Yeah, it's a great way to think about it. I mean, the warranty industry, when we sort of took a step back as consumers ourselves, going back 5 years, a lot of what we recognized is really the only opportunity to actually, quote unquote, insure your property that you're buying from a place like, electronics retailer, or a cell phone that you're getting maybe from the OEM, like an Apple or a Samsung. You could only choose to actually insure it against things like damages or, breakdowns within 30 days of your purchase. I mean, imagine if auto insurers said they wouldn't cover a vehicle for collision if you bought it more than 30 days ago and hadn't insured it yet, right? Like, the concept seems a little weird. And so what we realized is a lot of that really came down to a lack of application of technology in this space to help combat fraud. And so when we first started, our platform would enable customers to take photos to actually verify the condition of their property that they wanted to insure. And exactly, that really unlocked the ability for customers who didn't buy something like cell phone insurance or an extended warranty at the time of purchase of the item to now buy it at any other point for the life cycle of that device. And so that unlocks a massive opportunity for a much wider array of players to get into the space of distributing device insurance and warranties as well, because now you can buy it from your insurance company, or maybe from the neobank, the digital bank that you're using, or you can buy it direct to consumer, or at a repair shop or a retail shop that you maybe go into the first time because your device is broken and you're sort of, feeling the hurt of shelling out hundreds of dollars to fix your device out of pocket. Well, we're also enabling, for example, repair shops to actually sell protection plans at that point of repair that might be months or even years after when the device was originally purchased.
Okay, so many different things here. So let me ask an overall question there. How does it work with the regulator? Or, one step before, because you talked about a point of sale, because unless you're a licensed agent, you cannot sell insurance. But then, of course, we need to talk about the most important, warranty and extended warranty, and kind of setting up the answer here. Let's start maybe with education and what is the definition of warranty and extended warranty, and then talk about the regulator and how you can actually enable those sales.
Yeah, absolutely. And I'll try to keep it as high level as I can, because the technical details can get a little overwhelming. But essentially, at least within the United States, there's the concept of what's called a service contract. And a service contract is something that's typically going to cover things like accidental damages, like liquid exposure, cracked screens, other types of, drop in physical damage. And it will also cover the more traditional sense of what people think of in a warranty, which is things like defects and malfunctions or breakdowns with internal components. And so a service contract is not an insurance policy. And so when you're looking at the warranty industry, the extended warranty industry, most of it's operating under what's called a service contract. And to offer a service contract to consumers, it's much less regulation involved around the licensing and the requirements that you need. But it does still require a certain capital requirement or to have a reinsurer or what's called an obligor to have the similar capital requirement. So within North America, we work with Zurich for our programs that acts as that obligor. And we, AKKO, are what's called a service contract administrator. And we are an administrator in all 50 states, which means we can do programs in any of the states with these types of programs. And then only if you're covering things like theft, loss, natural disaster, do you start to get into the insurance realm, where actually in the US, there's a carve out specifically for that style of insurance for electronic devices. And so it's called PEI, Portable Electronics Insurance. And it's a different type of regulatory structure and licensing that's much less sort of stringent, that makes it easier for people to buy coverage for their devices in the typical channels you're used to seeing it, right? From a cell carrier, maybe it's at a big box retailer like a Best Buy, Walmart, Target, Costco. And so when you're buying that coverage through those places, you're not going to expect every store representative to be, a licensed producer by any means. And so there's sort of this carve out for that area of the insurance industry. Which similarly we're fully licensed in to operate in as well for some of our programs where we are covering things like theft and loss and natural disaster coverage for electronics.
Fantastic. That's perfect. Okay, now let's talk about the fun part, which is the user experience, because you already mentioned that that's one of the things that you very proud of, and one of the, I would say, value propositions to the insurance companies, especially to the older school carriers.
Right.
What do they offer? What are you offering them? And where did they go wrong earlier if they need your help?
Yeah. What we really noticed about this space when we were first getting into it is my co-founder and I are not from the insurance space at all, actually. We are, first and foremost, come from technology, marketing, building great experiences, co-founder side, he comes from VC as well. And really just as consumers, we were both people that had, device insurance, warranty for our own personal devices, and really realized that the experience for customers is really just pretty broken. It's painful for customers to have to manage different warranties and protection plans from a wide variety of different types of, retailers or distribution channels for where they actually bought those devices. And so that we realized was alone kind of a hassle, like in this modern era, customers having to manage all these different protection plans that expire at different times, cost different amounts. There's tons of, bloated margins built into all of them as well. So we really wanted to figure out how do we streamline this and make it more consumer friendly. And a lot of that as well does come down to the experience, which is, most of the traditional distribution channels make it really easy to buy the protection, right? Everyone can remember going to a retail store. They say, "Oh, do you want a 2-year warranty on that?" You say yes. They click a button. You're done, right? It's not even really like insurance in that regard. There's no quoting process. There's not a lot of consideration. It's usually like do you want the protection? Yes, no. And so it's really easy to sign up, but then it's a very different experience when you have to file a claim. And so we realized that, in this modern era, it was, 2018, 2019. Why is it that when your laptop has an issue or breaks down, you're calling this 1-800 number? They're, waiting days to get back to you. They're sending you to a repair shop. You're, faxing them or emailing them a copy of a estimate or a receipt. And then if it's approved, they're shipping you a check to reimburse you, which can take, days or even up to a week to get reimbursement. And we were just looking at this as, modern consumers ourselves. We rely on our technology so much. And we were like, why is this not a fully digital process? Why is there not more automation? We just saw so much inefficiency there at the detriment of consumers. And so that's what we really wanted to fix, was building a technology platform that would make it as easy as hailing a ride through something like an Uber or a Lyft, or ordering food through, a DoorDash or something of that like. Well, why isn't there a simple digital experience so that when something goes wrong with your technology, you can click a button and immediately get connected to a provider and go through this digital experience? It's going to be quick and a fast resolution to get people back to using their devices. So a ton of our focus really, once we figured out the initial product offering and a more tech forward way to enable more distribution across more channels, was really diving all in on how do we make this the best experience for customers by making it digital first and by having more automation as well.
Dan, I think that you gave that pitch so many times that you know it by heart. We're going to wake you up in the middle of the night. Okay, tell me about how user experience helps to retain customers and make their life easier and love the brand, well, or at least don't hate the brand, right? There's no, Is there an upside, or is it just prevent the downside in terms of
Yeah, it's a great question. I mean, it's amazing. We're the highest ranked provider in our industry. If you were to look at our Trustpilot, Google reviews, and you absolutely do see some people that are just such outspoken advocates for our brand and what we provide. We've had some reviews where people have said, all insurance should work like this, right? And we agree. And there's a lot of other, companies out there, of course, focusing on making the same happen across more of the insurance industry. Or maybe one day we will expand to more of the insurance industry. But we have our hands full with devices right now. People rely on them so much. It's an extremely high volume claim environment, right? The incident rates for electronics breaking is 10 to 20% on an annual basis. And so that totally eclipses how many, quote unquote, insurance claims customers are going through for other types of lines of insurance, right? Thank God nobody's crashing their car, once a year, for example, or their house isn't burning down every other year. So it's a lot less touch points for customers with other types of those brands. But for us, we're dealing with customers far more frequently when things are going wrong with their devices. So it's really important, that we do figure out a way to address it and be very quick with it.
Mm-hmm. No, I'm thinking about, I'm AKKO. I keep everything, all my stuff perfect, for almost minted from the moment that I buy them until it reach phone. So I can have a phone that will be perfect, no scratch upon it for 2 years, and then just, on waiting in the line on the queue to pay for groceries. I don't know why. I just drop it. And of course it will shatter. It's not like a small dent, it will just shatter. And then 2 days later, it will happen again. So I always wonder, it's like, how do we underwrite that stuff, right?
Right.
It's like, in terms of statistics, and I'm sure that you have those statistics, and the cost of changing it, which is, it's not that serious. It's a few hundred, it's 100 or 2, or you go like, yeah, I'll just buy a new one, or maybe replace. It really depends when that happened, right? Then you can make that decision. But for you look at the macro numbers. How do you underwrite that problem and the different? And I'm not talking about, hey, are you this age and do you like clubbing?
Right. Right. And that's actually, it's pretty interesting because it's a great point. I mean, we do have data, of course. Once you get in market with a new product, you can, of course, start collecting your own data. But, I mentioned that 10 to 20% figure, at least on an incident rate basis for things, especially like your cell phone is kind of the highest incident rate device. Because as you mentioned, we're using it all the time, right? And so many times coming in and out of the pocket, you might, drop it. But at the same time, with those devices and that high incident rate, we are able to reference, other people in the industry as well, but sometimes you have to learn it on your own. And you can't do an underwriting or a quoting process based on, personal attributes. We can sort of, extrapolate some of those based off of other points of personal information, maybe that are provided when you register. But by and large, the industry has not really evolved that way. And so we weren't really able to be the first that's going to ask you a bunch of detailed questions about you and your job and your age and all these other things to help us with the underwriting. You really have to more go off of what's the actual device itself. And so that's where we're able to have a lot of fun sometimes with the underwriting process, right? Especially when we're working with, for example, brand new devices in the market, working with OEMs that are coming out with a new type of piece of hardware. You sort of have to look at it and think, okay, well, what type of device in the market is this similar to, right? For example, some of these AI pins and pendants that you're now seeing, right, that are costing anywhere.
The Apple
exactly. Right. Augmented reality. So you kind of then, in our position, since we do the actuarial and the underwriting work ourselves, and then of course get approval with our reinsurance partner. But we're doing the initial analysis for that. And we're kind of looking at different form factors for devices, thinking about, is it being used? Who's typically using it? Based off of how it gets used, like what's likely to happen to it. And then sometimes, in the case of new devices, we have to actually get our hands on it and actually see the build quality and drop it a couple times ourselves to see what's likely to happen if we were to start covering it. But it's an amazing process to go through. And I think a lot of the traditional incumbents have more of an inclination to just say, we're not going to cover anything that we don't know about, because they don't have as tech forward and sophisticated of a platform and a process. And because we do, we're the perfect match and the perfect fit to be working with OEMs and new companies bringing new types of hardware to the market, because we can actually accommodate creating warranty or care programs for them.
Yeah, but this is where the reinsurance actually, have been one of the more active investors in the InsurTech space, because InsurTechs bring them new risk to cover.
Right.
And open, as you just mentioned kind of earlier, you just increased the pie or added more ocean to the kind of red ocean that was already there in terms of the warranties. And you, so between adding new products to adding new ways to approach, and well, within the warranty, it's like take it or leave it. But then if you have time and actually can do underwriting and ask questions, which now, would that still be a warranty if you start asking questions about, the person, or then you're shifting from the service to an insurance product?
That's a great question. To my knowledge, and I'd have to consult our compliance attorneys.
Yes, please
but
do.
to my knowledge, you're totally welcome to ask just about any of the questions you'd like as part of your sort of like price determination process. You wouldn't necessarily, you'd still probably call it quoting, even though it's a service contract product. But as long as you're sort of outlining that there's a variability to the price based off of certain factors, and of course, as long as those are, legal factors to look at and aren't breaking any other sort of broader rules around, discrimination, et cetera, and they're handling that data properly. But you are actually welcome to ask questions like that. For us, though, the biggest thing is you think about the most likely channels products like ours are being distributed, and you think about a retail shop or an e-commerce store, or a new up and coming cell carrier that's an MVNO, right? And they're not necessarily going to want to have to ask all those questions as part of an underwriting or a quoting process when a customer is just trying to quickly check out and buy a new device. So a lot of it, I think, just kind of is around like the type of industry, the amount of risk and exposure that you're actually covering is not really large enough to, necessitate adding that type of friction to the purchase and sort of registration process.
So you have your, not MGA, but your
administrator
license and everything, and that's your service that you sell, and you enjoy the premium with the reinsurance structure. But then you have, of course, your SaaS services to other insurance companies that mainly outside of the US. How does it work, and what is the service that you provide the foreign carriers?
Absolutely. So having been in the market in the US for several years, and sort of after the first couple of years, you're gathering data, you're learning the processes, how everything needs to fit and piece together to build a, widespread, like fully encompassing and comprehensive program for, warranties and device insurance programs. And so once we had put that together in the US and realized and kind of knew and had locked down all the pieces that are needed to launch that successfully, we were seeing the success through the great reviews we were having. We were having, industry sometimes beating loss ratios as well, due to the technology we've created that help with monitoring and preventing fraud as well. And so that was all something that we started to realize could be very easily, portable to other markets. And it actually started inbound interest from outside of the United States, with InsurTechs or insurance companies or folks in the fintech space that were actually reaching out saying, hey, in our market, we don't have warranties really. We don't have device insurance programs, phone insurance programs, or it's such a new part of our industry. And the couple people that have tried to do it, it's, failed pretty poorly because of, crazy loss ratios going out of control. And so I think a lot of them were maybe just kind of looking around online. They found our site, they reached out to us, And so that's where the initial talks kind of began, was actually really this inbound request from outside the US of people saying, hey, we want to launch something in our country, and we see you guys have figured it out in the US. You have great reviews. We can see you guys are a technology company first and foremost, that this is a digital first product. And so that began sort of a chain of us, getting similar requests from other markets. And so outside of the United States, the strategy with us is a little bit different. Instead of working with sort of a more fragmented sort of tail of smaller distribution partners, we're usually going straight to very large distribution partners, whether that's a bank, a telco, a large insurance carrier. And we're working directly with them to let them, leverage the platform that we've spent years building and millions of dollars of putting development into and learnings into. And now we can enable them to just very quickly go to market with a similarly successful device insurance program that's also going to deliver that great experience and digital first experience and automation.
So you have a mobile application, right?
We do. We have more applications than I'd like to say that we have, just because of all the maintenance. But in our space, you have to be very far reaching. So yeah, we have a mobile application for customers to use that allows them to verify and register the devices that they want to protect or manage their account, initiate a claim. We also have a web application as well that's similar for certain programs and partners that maybe don't want a mobile app to be used, or where a verification process isn't involved. We have our claims platform, and we even have a web portal and point of sale platform we use that is for small retail shops or repair shops, so that they can access that to help service our repair claims for customers, but also use that as a portal to kind of act almost as a broker and agent themselves, actually selling protection plans. So we really operate in a variety of spaces in that regard, across direct to consumer, B2B to C, B2B, B2B to B, through all these various sorts of industries as well.
So the reason I'm asking about the mobile application is, we've seen so far we focus on your relationship with the carriers, the incumbents, the reinsurance, and then it's a question with the customer, right? Because you're telling them, hey guys, we know how to do user experience. It's going to be amazing, and it is amazing. Now it's a question of how do you apply that amazing to the customer through the different digital touch points, mobile application, the portal, all the things that you just mentioned. And when I talk to different startups or companies that are digital first or mobile first and have that approach, there is always a question of, but they need to learn about you and to download the app. So every time I hear about some sort of we are going to be that insurance wallet and everything is going to be in your pocket on your mobile device, and just like two more steps in the funnel, and those are major conversions, right? Until they will come from become a user and then a paying customer. How did you solve that?
That's a great question. And it's funny because when we initially launched, it was direct to consumer because we had a new product. We were a new company. You have to get into the market wherever you can start. And we definitely learned those lessons early on. We used to have a little more of kind of a quoting process where you sort of completed your profile, told us things like your address so that we could register your plan. We asked you what type of device you wanted to protect before you hit the purchase page. And we changed that around pretty quickly to optimize that. And so in our line of business, that is one of the benefits of not having a quoting process, really, at least that's required or used for underwriting, is the minimum amount of information we needed from a customer was which plan would you like and what's your cell phone number and email. And then we would take their payment, and then they go through the process of providing their address, activating their plan and their protection, registering the device or the devices that they would like protected by their coverage as well. And so we left a lot of that activation and registration process to
the statues behind you. So I recognize the Thai, I recognize something from Africa. Is that fertility statue? What is that?
Yeah. This one right over here is from Africa. Yeah. And I don't recall actually the exact country. I think it was gotten a long time ago.
No, the whole setup is beautiful. And what are the ones that are far, far away that my eyes cannot really see?
Yeah, over on this side?
Yeah.
Yeah, so the one that you'll see closest to me is a statue. It's sort of like a bird. It's a ceramic from Mexico. And then
Mm-hmm.
above that is a drum that I believe is from Japan. Um,
Oh, oh,
yeah.
cool. Okay, let's enter the camera back on you and allow me to ask you, because those are very interesting and I love, I'm sure that there is a story of when you acquired it and what and when and all that stuff. But let me ask you the question that I'm asking everyone. What advice can you share with the audience that you learned over your journey since you
Mm.
started the AKKO?
Oh, that's a great question. Keeping it insurance focused, because there's plenty of lessons, of course, that I could relay just in regards to generally being a founder and having a technology startup, building a team, growing, raising money. There's a lot to unpack there. But from the insurance side, um, we really do like live and breathe customer experience. And I think that, again, as I mentioned, we didn't come from the insurance industry, my co-founder and I, which I do think was a benefit for us, especially, again, as I mentioned, like in a space that is so focused around consumers, right? And providing them a
Mm-hmm.
great experience, providing especially that really quick claim resolution when it comes to getting them back on track with their devices that we're so dependent on. I wouldn't even say, just rely or we want them, dependent on them and getting those back to customers. And I think there's a lot of lessons around putting yourself in the shoes of the consumer and thinking about what is the experience I would want for myself when I'm using this product, when I'm going through the claims process and experience. And I know that's, of course, at the end of the day, really what insurance companies are here to do, right? Is pay claims. That's the service you're providing. But I think there's still so many opportunities for people working in the InsurTech space to be really thinking about that experience and similarly really living and breathing that experience. Because at the end of the day, it's the best experience for the customer that ultimately wins out. They're ultimately choosing the experience they want, the product they want, the company they want with their wallet. And so, that's who wins out is really focusing all in on that. And I think especially today, that has to be digital first, or at least much more digital native. With things like omni-channel support for folks that are maybe not using technology, whether they're not able to, they're not adept at it. I think about like older generations, for example, are still going to want to pick up a phone when they have an issue and speak to somebody, but the younger generations want to use a mobile app. They want to use a website. They want to use a chatbot. They want it to be quick. They want it to be automated. They want it to be seamless for them so they can get back to focusing on the other things they want to focus
Oh, you open so many follow-up questions now.
on.
So just quickly, are you following NPS or you go like, yeah, that's too old and doesn't make sense in terms of the detractors and promoters?
For which, sorry?
NPS, Net Promoter Score.
Yes. So we actually have, I believe, one of the highest in the industry at 66, and that's, I think, for any insurance company, a pretty amazing stat to strive towards when you're dealing with people when they're not having a very very good time with their experience. But there's a lot of other things to dive into and unpack besides just NPS. I mean, it's a good thing to have as a normalized way to sort of benchmark yourself around other brands, other products, your peers within your industry, but I think going far deeper and really diving into the metrics that lead to what makes a great and seamless experience for your customers is going to vary company to company. And so really just figuring out what those levers are that are driving a great experience. What's actually making those promoters want to promote you within your NPS? You need to dive in and figure out and get a little more qualitative data and through that sort of product discovery and really knowing your customer to understand what the things are that you need to focus on. And sometimes you might be surprised at what those are. You might think or have an assumption that, oh yeah, if we do this part really well, then we're doing a great job. But maybe it's a different part of the claims process or the overall experience you're providing customers that actually resonates and matters more to them.
So you mentioned earlier, and I really wondered about it. Your title is co-CEO. How does it work? Who,
Yeah.
if there is a conflict or a debate or an argument, who takes the decision?
Yeah, great question. I will say, I think that when you're choosing your co-founder, one thing you should ideally know is that you aren't the types of people that will really get into arguments on a frequent basis. I don't think it's necessarily the best dynamic to have when working professionally. The biggest thing, though, when it comes to that split of co-CEO, really comes down to what each of our skill sets and proficiencies are. You have to find, typically you want a co-founder anyways that complements the skill sets you have. But I think that a co-CEO split speaks even more to that, around two people that fill those skills and those needs around leading an organization, around executing around a strategy and growing a business. And so you really just kind of level up. And I think you're really at an advantage when you have the benefit of two co-founders that are equally operating at that level, but also complement each other. So for example, within AKKO, I oversee product, marketing, the customer experience and our claims operations, as well as work on essentially sort of solutions engineering for our sales and revenue team when we're working with large and more complex programs and projects. And my co-founder, coming from a management consulting background, he's an MBA, has a lot more of that finance, operations, HR management, as well as a sales and business development background. And so when we initially joined forces early on, we realized just how much we complemented each other. And so it really just felt natural. I think if you have to force the conversation or debate over splitting that title, it probably is not a good decision to do it. But it just fell into place naturally for the two of us. And we've had a successful partnership leading our organization ever since we initially joined up together 4 years ago.
Cool. No, thank you. Because it's always a little bit of a challenge. The classic will be, you're going to have the CEO responsible for operations of the business, and you'll have the CTO. This is the classic San Francisco Bay. Bring me the business guy and the technology guy. And then in insurance, you need also the technology guy should be the chief insurance officer.
Right.
And from there, you continue forward, building the team and the culture and the organization and getting shit done.
Yeah.
Well, no, thank you very much. So talking about money, we'll talk after we stop the recording. And apparently also we need your co-CEO with us. Fantastic. Not as funny. Okay, I think that, Gerald, thank you very, very much for joining me today and sharing with the audience about AKKO, the importance of user experience, and how insurance companies can move forward, and especially a little bit educating us about warranty.
Absolutely. Pleasure to be here. Thanks so much for having me. Good luck.